Traders, what's going on? Welcome back to my trading view ideas. Only joking, right? So, just going to talk about just a couple of things here. I'm sure some of you have taken a look at some of the ideas that we've posted very recently. One of them being on Euro Aussie dollar. Now, on Euro Aussie dollar, we was looking for price to come back to in and around this retest level here. But you can see, obviously, it never happened, and the market just left without us. Now, this is just part of trading, and sometimes you're just going to have to learn to accept this. I was re-analyzing this to see once price had broken this structure here, if there was an opportunity I could have identified to then take this trade around this area of sensitivity here where these wick rejections are. Looking to the left slightly, we can see, price breaking above this key level here also, and then creating this new high. Maybe it would have been an idea to look for this potential trade. But again, I go back to the saying, woulda, coulda, shoulda. And, it just is what it is. If you don't get the trade, you don't get the trade. But it's really nice to see that the markets did continue to go up. It's just very unfortunate that we didn't get the entry that we was looking for. But that's just life, and it is what it is. Now, on the Aussie dollar USD trade here, we were looking for exactly what we was looking for on Euro Aussie dollar for price to get back to this key level. And I mean, look, I got the wick entry, but in terms of the exact level we was looking for, look at that for an entry. And for those that, took this trade, I know a few of you were able to take 30 pips off of this market. I'm really happy for you. But in terms of the trade that I had in play, we got back down to the break-even level. We didn't trigger the alert, but, we just use common sense here. Price is at this level. We're pushing bearish. It's time to lock this in at break-even. And unfortunately, the markets came back to take us out at break-even. Now, you don't want to hold these trades and just hope that they're going to continue down. When you get this bearish sentiment into a key level, one or two things are going to happen. Price is going to break through with that continued bearish sentiment, or price is just going to respect the key level, and then whatever happens after that happens after that. So it's better to make sure you're more focused on risk before reward than you are to be focusing on hoping for the trade to go in your direction. This morning, I called out this trade here on Euro New Zealand dollar. It was triggered into this trade, and as you can see, the markets pushed to the upside, which got us to a break-even trade again. But I guess with the news that's just been constant this week, it is a heavy week of news. Again, we were taken out of this trade at break-even, but again, risk before reward. Some traders will not go break even, hold this trade, and if you're that type of trader, then you'll still be in this trade. But what you have to do is make sure that you're eliminating emotions, because as you can see here, imagine you were sitting in this drawdown, how you would have felt. And if this didn't reject off of this level and actually continue to go down, then how would you have felt then? But it's really nice to see the analysis playing out. It's really down to you as a trader, how you decide to take these trades. But personally, I still think it's a very, very good call here, in my humble opinion. And yes, it is what it is. I have a new idea anyway on pound JPY. We can see, again, I don't focus on fundamentals, more just solely technicals, focusing on price action, market structure and behavior. But with the uncertainty of Brexit, etc., I do believe that after the break of this structure here, we could see this market continue to push to the downside. What I'm going to want to see from this structure is I'm going to want to identify these wick rejections first and foremost, which have already printed themselves for us. And this is a sign of bulls trying to push this market back up and failing. Now, I would say in the next 15 minutes or so, if the markets can hold this key level and we start getting a momentum shift to the downside, then we should be in a very good position to see this market come back to some of these key levels here. So what I would plan with this, or my idea for this, is one or two things. Firstly, is a more aggressive entry on this for a short, which would be price breaking below this current wick here with a really nice stop loss above structure. Now, two ways you can enter this. You can place your stop loss above a major level here, which is 50 pips, which is something we don't really want to do, because then if we're targeting these lows, we're only really going to get a 1-to-1. And in my personal opinion, that's not really good risk to reward. So I would say here, I would safely go with a 25 pip stop loss on this one. Let's make sure we get this one in correctly. And say to ourselves this: if the markets are going to continue to push down and hold this key level, then in theory, we shouldn't break above this key level that we have drawn in here. We should respect these wick areas, and we should potentially continue to push down. That's only if we break these levels, and that's what I'll make sure here now that you all understand. If we break this low, then we should see the market continue down. Don't really like it that big. Okay, so if we break this low right about here, then we should see this market continue down. I don't see any traffic until this area here, so this looks like a good sign. And if we're to plan this trade, then we'll be looking to take at least, I would say, comfortably a 2.46 risk to reward off of this trade. Now, I don't want to stay on this recording too long, just in case it starts to break now, but I will give you my opinion on this. We would much prefer this market to hold above this sell stop entry here for the next 13 minutes. If the market starts to break this level, then this would be my second plan, so that I'm on the right side of momentum. I would then look to take the trade at the break of this wick area here with the stop loss in the exact same place. So I would even go for a 35 pip stop loss here just to be safe rather than sorry. For some reason, I like the round numbers, and this has nothing to do with Forex. It's just the way my mind works. And then we'll be going for a target down here. Now, granted, the risk to reward is not great, but anything above 1R is perfectly fine in a situation like this. So plan A, if price holds above this level for the next 12 minutes or so, I'll be looking for a sell stop entry back down to these lows. And if price does manage to break this level here, then I'll just look to place a sell stop below this previous wick here, and then look for that continuation down. So these are the plans on this one. We will see what happens. To be brutally honest with you, actually, the stop loss placement is absolutely correct. I mean, even if you shift it a little bit, it only increases it by a little bit. It doesn't matter really. It's neither here or there. And yeah, I think this is going to be the plan. Let me know how it goes. Remember, these are not signals. These are just of my own opinion. This is not financial advice. This is just for educational purposes only. I wish everybody a fantastic trading day, and we will catch you on the next video. Bye-bye for now.